resistance develops stress, and stress causes physical, sickness, fatigue in an employee, and also called absenteeism and turnover, which means if you don't like the change, you can resign, or you take a stress. When you take a stress, you will be sick and you apply for your sick leaves and all the stuff. So that management, head office implementation, that 1 month everybody should be converted into Office 365, that go vain. It took more than 60 days or 180 days to complete that transition, right? So that's why, the many students, they like, they also asked me question, why motivation is going to be decreased from communication. What will be the possible scenario? I just explain you that there can be many others as well. This is just one scenario. Controlling, of course, that is the fundamental job of any managerial position, which means you need to ensure that the plans are being followed. You are on the track, or you are on the target, right? So that, if you deviate from your plan, so controlling helps you to take emergency response so that you are back on track. So feedback, the biggest tool of controlling is the feedback in the form of performance reports. We'll talk about which kind of performance reports are needed, any kind of report. So that helps you to find, okay, my cost is increasing, and if I project this cost for 6 months, okay, we cannot afford that cost. Why? Because we don't have that budget, right? So you compare with the actual one with the budgeted one, and then you find out, okay, which control functions need to be implemented, or where we need to have change, whether we hired too many or whether we hired too little. Okay, so the planning and control cycle begins with all these 4 managerial functions: planning, directing, and motivating, and then controlling, and then you make comparing the results, and then basically it's a loop process. And here in the middle of that loop, your decision making required. When you are formulating the plan, decision is required. When you implement the plan, decision is required. When you're measuring your performance, decision is required. When you compare the results in that one, decision is required. If comparing actual one are not according to your expectation, then you again formulate a new plan, change in the long-term plan or short-term plan, and then you start again this loop, right? So the focal point is decision making, right? So you understand where we are going. Managerial accounting. First, we need to understand the managerial stuff, and then we talk about the accounting. So managerial stuff required a lot of decision makings here, right? So in every step, we are deciding, and then putting them into, actual implementation stuff. Even that is a decision making. So our learning objective is identify major differences and similarities between financial and managerial accounting. So we just explained the managerial stuff, and then we are now explaining why it is different from financial accounting. So now you can recall your previous semester class, financial accounting, and now implement those into managerial accounting stuff. Here, the users of financial accounting. So in financial accounting, we made the financial reports for external purposes. So the users of information of financial and accounting information, they are outsiders: government, lenders, creditors, stockholders, investors, right? But here, if you compare for managerial accounting, the users are insiders or managers. Not all insiders, just managers, not stockholders, just managers. It means these reports are not even accessible to employees and stockholders. or shareholders, right? For example, budgets. So employee can only see, for example, the salary budget. He cannot access to the, what is the material budget, what is the, transportation budget. It's like that. So even managers, only managers are, those who are in position to see the overall budget system, or managerial position people, they can only access that one, right? So only those personnels who plan and control the organization information, or accounting information is available to those one. So it means they are not making income statement, they are not making balance sheet, they are not making cash flow statement, they are not making retained earning statement. So these are some other reports, some other accounting statements that are not required by the law, because financial accounting statements are required by the law, and you need to upload it to your company sites or the SEC, so that others can easily access. So we explained the users. Number two, time focus. The financial accounting focuses historical perspective. What happened from January 1st to 31st of December? Okay, in January we did this, in February we did that one, and then we make income statement, and then we make the balance sheet. That's it. So balance sheet is always made on 31st of December, right? So this is based on historical perspective. So if you make a profit, that profit doesn't guarantee that in future you will also make this kind of profit. So if a company reported a profit in 2020, so that doesn't mean that the company will also, report the same profit in 2021. Maybe the profit is going to be decrease, or maybe profit going to be increase, right? But managerial accounting, the focus is future, like budgeting. We will be costing this one, we will be buying this much material, this will be our marketing strategy, this many person we will be needing, this many person will be retiring or leaving the company, so we need to hire this much person. Everything belongs to future stuff. We would be having this much profit, so whether we are achieving this profit on, monthly basis, or not. If we are not, then we need to revise our HR policy, our, marketing policy, so that, we can increase, or we can be on the track of having our budgeted profit, right? So the focus of the financial accounting is historical perspective, which is already done, but managerial accounting focus is which is yet to come, which is future emphasis, future perspective. Third one is verifiability versus relevance. So financial accounting is verifiable. You have the transaction codes, receipts, payment receipts. You can tally through the bank. We talk about the bank reconciliation statement. We talk about, the ledgers and journals. Transaction can be tallied from journals or ledger, and then receipts and all the stuff. So that's why financial accounting is verified. So that one which is verifiable also belong to historical perspective, right? But the managerial accounting, its information is relevant. So for example, you need sales figures right now, so that you can decide how much, you need to buy the raw material. So you can just have the sales report, and you can decide on that one. You don't need to verify that. If you need to verify that, then you send that report to the sales department, they verify the stuff, it takes weeks, and when the report come, turn out to be that your purchase decision now gone, there is inflation, cost changes, and now your budget is like totally disturbed, right? So you need relevant information, because that is not required by the law, not to be verified. No need to be verified by the accountants, external auditors. You just call your manager or call your, sales department. You can say that, okay, what was the sale in 3 months? They can log on to their computer. They can tell you unverified figure. which you can trust because you know that the account department is quite fair. But if you need verify, then you need to wait, because then they send it to the auditor or they send it to the manager who verify that and then send it to you. Although this verification process is now becoming shorter and shorter due to technologies, but still, similarly, the purchase decision is also, becoming very shorter and shorter, because if you want to purchase through, the online platforms, then maybe they have some kind of window. Okay, from this 1 hour, if you buy in this hour, you're gonna get discount. If you cannot, if you don't avail this discount in 1 or 2 hours, this discount coupon is just expired, right? So in that case, you need relevant information. You just call, make the decision, and that's it. So that doesn't to be verifiable. Prescience versus timeliness, right? Like I just explained, timeliness also can be the example of here. You just need the time in 2 hours, you need to do that one, and that's it. So Precision is very precise. Accounting information is very precise. The profit is 12,000, 12,308. Sorry about my writing. For example, 12,308. Very, very precise answer. But if you talk about the managerial stuff, they will just send, okay, 12,300. Make decision on that one, right? So your emphasis on timeliness, right? If you try to have precision, then you need to tally the results. You need to wait about the verifiability. You take the approval. It takes time. And if you need to make quick, decisions, and you can just say that, okay, 12,000 round about 12,300. Okay, make a decision. That's it, right? Subject. The primary focus of the financial accounting is the whole organization. Sales include all the sales items. If the company is making different items, for example, the Gap Incorporated is making jeans, male jeans, adult jeans, kids jeans, right? There are in jeans there are different stuff. The skin tight, regular, like flapper, shorts, like. But the Gap Incorporation only, gonna give you one figure, that is sales, right? So the focus is only the whole, focus is only the whole organization, profit, whole organization. They won't tell you that, okay, profit is coming from, how much is the profit from Shanghai Gap, how much is the profit from Beijing Gap, how much is the profit from Singapore Gap. No, they're just going to give you one figure, that is, okay, this year we made $1 billion profit, that's it. But the focus of managerial accounting is the segment wise. How much contribution from this marketing department, how much is contribution to the profit from the Singapore branch, how much contribution from